just a quick overview of the market internals from yesterday. What is this? Seen on Wall Street Bets, Netflix is going to announce an electric car. Sure. Those are the things you make up when you don't know what's going on. Okay, so the ticks, top left here, we've got this sell. The market has been in a selling state for quite a while with a couple of rip your face off rallies. I think this would have been, what day is that? This was the rip your face off rally attempt right here. Okay, so that green profile right there, that was the rip your face off rally yesterday. And then looking at the advanced decliners, about 1,990 companies were trading in the green. And then all of a sudden, it just took a big dump right at the close. And that's the characteristics of the market, especially when you get a high trend value above 1.2. Okay, you always have to know that the market is going to either power hour rally or sell off, and the higher you get a higher probability of a sell off or a fade when you get 1.2 and above. So this is a pretty nasty sell-off that we saw yesterday, and mainly because it could have been Netflix. Netflix is definitely adding to the selling pressure. And we have the VIX coming off of A6, 1, 2, 3. And actually, if I turn on the Wolf Wave for this VIX, it's actually showing a target of 35. So that's pretty nasty. Let me just see if I can post it here. Okay, so this is one version of the Wolf Wave. I probably need to change it and modify the wavelengths. The default wavelength is 13, so probably want to add one more. And then change that to 7. So, and the reason why is because each wavelength that's being identified by the Wolf Wave, you can't be stubborn and just force it to find wavelengths at 14 or 13. You have to kind of create a filter, a set of instructions to find these wavelengths on various settings. And then as a trader, it's up to you to figure out whether the price action is going to expand or not based on your understanding of those indicators, whatever indicators you use. Okay, so let's see what this does here. Hmm. Yeah, it's not showing on this one. I don't know why. Maybe it's on the 78 minute. Yeah, there. Okay, so maybe it looks like it's kind of reached it already at 25. So I thought 35. Okay, I'll have to take a look at this later. This is too slow. Anyway, so we've got a VIX that's still signaling a risk off. So whenever the VIX is green, it's up 2.54. And if it gets long and hard, then that's probably the bottom of the market. But it's still trending. You can see the band here expanding, and price could for the VIX could continue to trade in a risk off environment all the way up to 30. But there's still this gap here at 17. Okay, so that's the tough part. That maybe a double top to 30 and then it rolls over and fills that gap. Hopefully February is a bit better month. It's been a pretty brutal January for options in terms of 750R. It's doing what it needs to do, right? Okay, so again, these market internals are as good as it gets. However, just things with those binary events in earnings for Netflix, I don't know if it's able to interpret what's going to happen, but that's a pretty big dump, 20% dump in Netflix, and it's trading at around $400, which is brutal. And we have the S&P now trading right down at the 200-day moving average with a doji. Okay, so I don't know what kind of candle this is going to look like at the end of the day, but it did make a low here at 4,429. We've got 400 points more to go to fill that gap at $4,000 in the S&P. Okay, so that's what we think is going to happen after earnings. Or maybe it could happen on Apple's earnings, where Apple drops like 5%. Is it not? Nobody can hear me? Okay, so looking at the radar, we can see that, wow, Bitcoin is taking a huge dump. And I don't know, the Bitcoin it's just been a disaster. I think if I were to be the architect of this, if I had JPOW's, well, look at that gap right here at 33,025. These futures gaps, it's really brutal. Right there. And then I left a little one here. Not good. So futures, continuous contracts, and you can see all these gaps. And I think Bitcoin is going to go all the way down to 12,000. Okay. And if it goes down there, I think the unemployment rate is going to decrease because a lot of people will go back and find a job. A lot of all those, I think there's all those steamy checks are in here. This is the money that the government has pumped into the market, and it's going to go all the way back down to here. Maybe want to take a guess. I'm guessing 11,570. I don't think Bitcoin will ever make it up to $1 million. I have a friend who's a hodler. He thinks it's going up to $1 million, and I asked him do you think you'll be alive when it's at 1 million? He said he might be. And I told him, don't you think you need to buy a house? You're a bachelor, you should buy a house. I think he has a couple $100,000 worth of Bitcoin. He's going to hold it till $1 million. This type of mentality is very stubborn, right? And you got to be careful with that type of mentality. It's almost as bad as, I don't know what it's that type of mentality. It's cult-like. Anyways, going toward the radar, we see that the Nasdaq is trading down 0.9%, S&P is down 0.56, and we have a lot of 70-minute TTM squeezes that are being displayed here, which means that there's a probability where price is going to expand from a contracting point. So this is, we've got all these TTM squeezes on the 70-minute time frame, and then we have an economic report. So I don't know how that's going to affect the market, but obviously if the economic report is bad, then it's going to exacerbate the sell-off that we're currently in. Typically when you get a Netflix move of 19%, which is like earthquake shattering type of move, it takes like months for this thing to recover. Okay, this is a huge gap, and that gap is not going to get filled until maybe November or December. Okay, Netflix is completely done. I was hoping for it to move higher since Squid Games was such a great show, but it really doesn't matter. It's just gonna, a bunch of people who are managing the shares of Netflix, those people are getting paid because they are dumping it on purpose. So I don't know, the market is going to be like obviously trading in with a bit of volatility, especially around that 200-day moving average. Path of least resistance is lower, and we know that there's a gap in the S&P all the way down to 4,000. Okay, I'm really sure that gap, before anyone even talked about the market correction, I was the only one who, I'm probably the only person that you may know that talked about the S&P 4,000 gap, and I couldn't believe it. I couldn't believe they left the gap open for that long, and that means it's way down here. That means a lot of, and I hope the best thing that can happen to anyone is it will. It doesn't matter. I didn't make any money on it. It's no credit, but it's a warning. The best thing that can happen is it just goes straight down, okay, and then we go straight back up. That would be the best, but I don't think that's going to happen. It's going to be a little bit more complicated than that, and maybe using volume profiles could help us understand what the hell is going on with this market. Where is it? Technicals, visible range. Let's increase the resolution to, I don't know, 90. Okay. So on the monthly time frame, let's take a look at this. Ooh. Right, so got this massive bacon, and on the monthly, so January is a pretty nasty month, and February will probably be just as nasty, right? Because it's just, we could get a doji like this, but it looks like this node here got taken out, and the next node is around here at 4,300. And then the gap of 4,000 right here That's see how there's like zero volume there. This white horizontal line. When you compare the volume profile on a weekly scale, you can see there's zero volume. Nobody made a purchase. So how the hell did it gap up like that, right? That's a pretty nasty. Look at that. So if volume profile represents all the exchange, the transactions between the buyers and sellers, then how the hell did it create a gap like that? And if you believe that the market is a big scam or manipulated, then someone or something who created a point in time in space to get this filled on purpose. And I don't think they're making they don't care about how much money they make. Could be like the architect of the market and given instructions from Yellen or Jay Powell. Those are the people that I would think that have the power to create a gap. Like if you are able to create a gap on your own, it means you can control the market. If you can't create a gap, it means you're just pretty much a retailer and you have to manage risk. These people, there's a casino, and the casino never loses, right? So we're in the market. This market is designed by something that thing never loses, and that's I strongly believe that this was made on purpose. This 4,019 gap. But as you can see, things don't just move in one direction. They do chop and pop, just like one of those it just Elliott wave patterns. So this is a Elliott wave 1, 2, and 3. We are in this. If we reverse this chart upside down, this would be wave 1. 2, and 3. And 3 could go, we don't know where it can go, but let's just say 3 goes somewhere around here. And then 4, we get that dead cat bounce, and it will be a dead cat bounce. Will dead cat bounce up to no lower than this point right here, 4,555, because that's just the Elliott wave rule. And then we go all the way down to here. Okay, if you see what I did here. So I'm assuming that this is wave 1, and the retracement, which is wave 2, ended here, and then we've moved lower, and we're in wave 3, which happens to be sitting on that 200-day moving average. So then once wave 3 is done, and I think that will be done when we get the sell the F and rip indicator to trigger on level 2. So this is level 1 here. Sorry, buy the F and dip. And buy the F and dip level 2 would be minus 600,000. So whenever it gets down this low, you got to put on your thinking caps and open up some positions 10 seconds into close long calls, because there's a good chance that the market could stage a rip your face rally and push prices up to this level, and then we go down. So if this is wave 5, then wave 5 shouldn't be the longest wave. So I would expect wave 3 to be a little bit longer, and then bounce to here, and then we don't know how big the bounce will be. So that's what I would assume my Elliott wave pattern to be, right? Because I'm not gonna do every single wave pattern for every time frame. I just want to create a general template looking at the first impulsive move, the bounce, which cannot be lower, or the bounce which retraces a certain amount, like 61%, 50%, and then once that is confirmed, then we've got wave 3 in progress, which is this, and that wave has to be the longest. And definitely it is the longest if you compare wave 1 and 2 with wave 3 that we're looking at right here. But it could be longer because we're assuming wave 5 is going to be the one that takes out this 4,000 gap. It can't be wave 4 because wave 4 moves in the opposite direction. So this is the general template of the wave. And once that fills that gap, then the bottom is in. So if you have a 401k or an IRA, just be prepared to see you gotta buy the dip. If you have a 401k or an IRA and you're trying to retire the traditional approach, then you gotta look to buy as much as you can at around 4,000, and then just wait 5 years, 10 years to see if it makes a new 50, to see if the markets make a new 52-week high. Okay, that's the template, and so I have just one position that's in Tesla. Hopefully we can get a bit of a dump in the first 30 minutes of the open. And you can see there's a lot of bullish wolf waves here. And you'd be, God damn, like, why don't we take this bullish? And you can't really, because the risk is off with the VIX. And then the daily Heikin-Ashi candle, this is basically the thing that if you don't know anything about trading and you're very, very reliant on technical, indicators, try just using a simple centroid approach and just see, figure out where the centroid of the candle is, and if it's red, then you want to probably stick with the trend until it turns into one of these things, and then entertain the idea that the trend is going to reverse. So with Tesla, I think my puts, it's not looking like Tesla wants to do anything spectacular. I know there's a 78-minute time frame, and I'm trying to see if it, you can see the pre-market's at 987, and it could create a, the next red candle that drops all the way down to 958. That'd be great. But it could easily, you can see these wicks that form that really kill the premiums. That could also happen too. So, zero DTs are very risky. They're not, you don't want to be taking too big of a size. I have about, I think 8 to 9 contracts. So even if I lose them all, I did lose all my 920 calls, about, I think 70%. So I'm just losing money, but not taking big positions like 5, 10, putting down 10,000, 5,000. Not yet, not in this type of market. But my plan here is just to see how much the 940 puts appreciate on those puts. Close off as much as I can, maybe just close all but 2, and then see if the market throws up at the end of the day, or just take my profits, whatever I get at the open, and then call it a day, because the move is already, all the moves in the market, everything is dumping at the moment, and it could reverse, right? We don't know. We definitely has a chance of reversing since we're in cycle 3 on the VIX, right? So 1, 2, 3, and we just need some sort of reason for this to continue with the risk off approach, and the risk off is going to be a little bit more difficult to comprehend next week because we got FOMC and interest rates. So a lot of interest rate talks next week is going to really move the market, and that could just be the trigger that sells the market off even more. Okay, so buying a bounce here, is it worth a shot at the 200-day moving average? I would probably, whatever, if you have any positions at the open, you just want to probably just close it all off or manage whatever profits you have. And I think by the end of the day, the last hour, we should see a bit of a bounce, and that's a tradable bounce. Things might go green at the end of the day, right? After selling off. Could go green at the open. I don't know. It's already kind of... S&P is trying to go green here. Is gold going crazy? Let's take a look at gold quickly. Yeah, we might be in a commodity cycle boom. So peak oil, peak gold. I remember back in the day, gold is doing really not much. It's only up 0.2, down. Peak soybeans, yeah. Peak orange juice. So nothing there. I don't see gold, just kind of bounced off that 6-day moving average. It'll make a big move on Wednesday next week with FOMC. Okay, so that's pretty much it. I think a lot of the tech stocks have pulled back a lot, 50-40%. Apple's still kind of, Apple and Amazon and Google, they're starting to kind of unload and unwind. 4,000 in the S&P sometime by March, my best guess. But for now, for the trading day for today, Friday, January 21st, my basic plan is just to manage my one position, which is in Tesla, and not look to, if I didn't get any other puts, you can see on the radar everything is dumping, right? Most of the stocks have dumped on the last hour of the day yesterday. So obviously that's, there's going to be profit taking coming in the first 30-minute candle, and then some shake and bake to decide whether the market's going to sell off even more or bounce. And to day trade this, I don't know. I'm as you may know, I'm not a really big believer in day trading. Okay, because I come from a background of automated trading where I've made more money automated trading than day trading. I still don't understand. I'm pretty sure that day trading is straight up addiction. Okay, crack and cocaine is day trading. But yeah, from my experience, I can't understand why, day trading is just very difficult unless you got a very good mechanical approach. Because yeah, I'm living proof that doing nothing, you can make a lot of money. We're making tons doing nothing. If you think about the amount of time and effort required versus profit, we put maybe 30 minutes per day, no, probably 1 minute per day managing the systems, and it makes money, right? Versus day trading, you put in hours a day and you try to make a couple $100, which is almost like dishwashing. Maybe we should just start becoming dishwashers. Maybe we should make a company, a disrupt the industry by creating a dishwashing service. So that's my plan. I just can't see myself buying a whole bunch of calls, buying the dip. I just don't think that's going to work. I am still very interested in this Roku TGIF, but let me just turn on the Hikinashi candle. So we got the first green candle, but Netflix pretty much destroyed any chance because it's got Roku gapping down $10 from its close. Actually, it pulled back quite a bit yesterday. So that Hikinashi candle, I'm gonna look at it at the end of the day together with everybody to see what it looks like. But I was hoping that it was going to stay green. I was planning to open up positions for TGIF 10 seconds into close on Thursday, but as you can see, if I did, Netflix would have literally bent me over and scream like a little girl. So I didn't. That's good that I didn't open up that TGIT at the end of the day, and I will monitor this candle. And if it does get green, I mean, it's going to be a great run up in Roku, making new 52 Kai sometime in the future. I don't know when, but I don't think it's going to happen anytime soon until that S&P gap at 4,000 gets filled. Okay, so that's pretty much my plan. I don't have that much risk, so I have just about a couple $1,300 worth of puts, and I'll be managing those positions right at the open. I'm gonna go grab a cup of coffee and then get ready for the opening bell. All right, thank you very much and have a great day.